This is when the owner of the business removes money or resources from the business for personal use. Okay, this is especially with sole traders. Okay, if you remove money for the business for the personal use, sole traders and also partnerships. Yeah, when you remove money from the business for personal use or any other resources, that is what called drawings. So drawings is a contra capital account, meaning it reduces your capital in the business. Remember, capital is the resources and money that are put into a business. Okay, so capital can involve money, equipment, machinery. Okay, so now if you remove any of those for your personal use, okay, then you're reducing the capital for the company. Is that okay, madam? That is capital. I mean, that's drawings. Okay. Then we've got liabilities. What we owe. Okay. Also, these can be separated into current and non-current liabilities. Current liabilities, you have to pay them within a year. Non-current liabilities, you can pay them after a year. Long-term debt. Current liabilities, short-term debt. Okay, it's all about the timeline. Okay, so amongst the current liabilities, we've got bank overdrafts. Okay, where you borrow more than you have in your account. You've got trade payables. These are people you owe money. Okay, like your suppliers. Alright, you have to pay them within the year. Alright. Trade payables, you also see them called as creditors. Okay, also called creditors. Then other current liabilities, you've got accrued expenses. Okay, expenses that build up as you are not paying for them. Okay, for example, let's say a business that's paying rent, maybe the first month passes, doesn't pay rent, they have to record that expense. Second month passes, they don't pay rent, they record it, and the expense starts building up. Okay, the more you're not paying for this expense, it's going to build up. Okay, so accrued expenses is a current liability. You also have prepaid income or deferred revenue. This is where you're paid money in advance. Okay, so since you haven't done the job, if anything happens, you owe the person the money they paid you in advance. Okay, for example, this happens well in the education industry. Okay. Oh, madam, you are kicked out. Are you there, madam?
Yes, yes. I've just returned on the call.
Okay,
There was
no,
an incoming call, so I had to respond to it.
okay, not what I'm recording.
Okay, thank you.
Yeah, we're just looking at liabilities. Okay,
Okay.
what you owe. Okay, so we're looking at the non-current liabilities. I mean the current liabilities. What you owe and must be paid within a year.
Okay.
Like a bank overdraft. When you borrow from the bank, okay, an overdraft where you borrow more than that you have in your account, you have to pay that back within a year. Okay? You've got
Okay.
trade payables or creditors. These are people who you owe money, like your suppliers. You also have to pay them within a year. Okay? You've also got accrued expenses. Okay, these are expenses if When they fall due and you don't pay them, they just start building up. Okay? For example, like rent. If you don't pay rent for 1 month, 2 months, 3 months, the rent starts building up. Okay? Then also prepaid income, where someone pays you in advance. Okay, you haven't completed the service, they have paid you in advance for a service. So that money is not, it's technically it's not yours, because should anything happen, you have to give the person back their money.
So it becomes a liability.
Yes, on your end it becomes a liability. For example, if you tell someone, you want someone to build your house, and they tell you, okay, this house, it will take maybe 7 months to build, and you pay them a lump sum, you give them their labor, you pay them in advance until the house is built, then they would have fully earned that revenue. Okay? But the moment you give them all the money in advance, it's a liability to them, because should anything happen, they will now be owing you your money back. Then you've got non-current liabilities. These are liabilities which can, this is debt which can pay after a year. Okay, long-term loans, mortgages, bonds. Yes, those are the non-current liabilities. Okay, you can pay them after a year. Okay. Yes. Even deferred taxes.